Here is a less common scenario where a flat top transitions into a double top. Despite the double top being quite small, it has a proportionally large drop, which is also less common but not out of the ordinary given the strong bearish volume and price action that was sustained in the following weeks. There are two possible outlines for descending triangles. The smaller one is a more strict adherence to what is commonly seen. The larger outline is technically correct. However, it has a support base extended very wide due to volatility. Normally, this would reduce effectiveness and even invalidate the pattern. However, since this 55 to 52 range is breached, there is still the distinct surge of selling. When the chart recovers, this same range provides firm resistance to the developing uptrend, like a more common triangle with a narrower base. The previous highs in the low 70s become the same approximate range of an ascending triangle. There are four upswings forming the upward slope of this triangle, with the second and third ones forming a compact double bottom. A small triple bottom lays the foundation for a relatively small but steep incline. After that, there is a strict double bottom that aligns with a single upswing point in 2014 to form a less strict triple bottom. It begins the final upswing in a horizontal resting phase range that completes a bullish continuation. A triple top rapidly completes with the third downswing due to the gap down acceleration. This is also a great example of a failed compact ascending triangle. An examination of the wide 148 to 122 range reveals two head and shoulders reversals that can provide additional detail. The pair of head and shoulders patterns are valid with symmetry and high volume. Breaking the necklines after trading is neatly contained within their outlines. This is why the 135 to 144 levels provide useful references when assessing resistance against the stable uptrend. The downtrend lines did have a short-term impact on the flat bottom range, but were still beneficial in identifying the transition towards neutral to bullish price action, halting the steep drop. Interestingly, the upper downtrend line almost directly contacted the absolute low during the next major downtrend, and is only breached with high and/or constant volume for both bearish and bullish situations. The April 2020 downswing and subsequent downward channel do form a less strict double top, with less impact in terms of a large drop, though there is still substantial resistance marked by the mid-150s range to define the remainder of 2020. After some moderate retracements bounce off the old head and shoulders levels, there is a gap up that just barely gets filled. This marks the beginning of a stable uptrend to new highs. The prior mid-150s range and the uptrend line become the first key lower boundary, as JNJ peaks to form a sharp correction to begin the new year.